All right, quick market update for Monday, October 15th. The indexes were more or less down today. Dow was down 0.35%, S&P 500 down 0.59, Nasdaq down 0.88. Gold was up slightly on the day, up 0.11%, and oil fairly even at 0.06. Um, so not much of a change there. I made some predictions on Friday about the S&P movements today. I was wrong in the result. I'll go over that now. I got a couple things right and one, but the result wrong. I did guess that the knife would stop dropping from last week. Oh, hello. Okay. The knife fell last week between the 9th and the 11th. I did guess that that wouldn't keep dropping today, so that was true. I guessed that buyers would come back a bit more, and I think there was some truth to that. If we look at the intraday, we can see that when the market hit lows, there were buyers that came in, that drove this thing up. Where I was wrong was that I thought these buyers might take the market up above 775 and maybe even retest 2800. So for a little while, I thought I was doing okay with my prediction when I looked earlier in the day. As I said, there were buyers coming in off of lows, bidding up the index, and it kept getting sold off. But it looked like there were sort of new the lows and the valleys were higher than the previous valleys, and it seemed through the day to be making new highs intraday, all the way up until 2:53 p.m. And I don't know if the bears were hibernating all morning and just woke up at 3 o'clock and realized the index had climbed up, and or maybe it was just hitting 2775 that maybe triggered some selling. But whatever it was, the market was up at that point, and that was when I was looking, and I thought my prediction was going to be pretty good. But no, the bears came back and sold off all those gains, eliminated any gains for the day, and ended up taking the market down 0.59% to end at 2750. So there we have it. So what's going to happen tomorrow? I don't know anymore. No, I've gotten it wrong enough that I now feel a bit abashed and ashamed. So certainly it's not good. It can't be good for the bulls if after such a massive sell-off last week, the S&P should be discounted from where it was 10 days ago. I mean, that should be the sentiment. But the buyers really aren't getting much traction here yet. We've sort of been going sideways now since, what was this, the 11th, when at the end of the knife drop. Well, yeah, I mean, more or less what it closed, was it about 2730, and here we are at 2750, two full trading days later. So that's hardly an inspiring raw moment for any bulls. If you're hoping this is going to recover real quick. So with that, I'm inclined to think we're not regaining 28 or 2850 anytime soon, but perhaps, especially with the sell-off at the end of the day today, I think tomorrow the market will go back to that level that I was talking about. I've been talking about a lot in these videos, somewhere between 713 and 730. So that'll be my prediction for tomorrow. Further declines and end up somewhere in that range. I still think that range is going to hold. Right now, it's sort of been 750 has been arguably an inflection point for these last couple days. or maybe perhaps the lower one I've been talking about, 730, 713. So I think we'll probably get back into that territory. I am still short this stock. This is not advice. I'm completely speculating here. Trying to decide what to do with my position. I eventually want to close out my short position of this index because I want to short some other stuff. So I'm trying to think of when I should get out of the short my short position. I own an inverse ETF with the ticker symbol SH, and just trying to figure out when to take my money off the table. Got to factor in commissions and all that. I noticed the gold price over these last 10 days has jumped up, and I think that's an interesting point. This is goldprice.org. Here's a very small chart, so hopefully you can see that. This is a 60-day chart, and you can see over the last 60 days there's been a lot of sideways motion in the price of gold centered around 1200, but in these last sort of 10 trading days or week or two, it's broken right out of that and jumped up to 1220. So that could indicate investors are taking a different approach to gold than they have for the last couple months. And indeed, if we go back further than that, we bring up the 6 month here, you can see gold's been dropping, basically for 6 months until the end of August, when it finally bottomed out, until just this week when it sort of popped up again. So maybe the first significant upward trend or upward move for the price of gold in 6 months. And we have to go back a year before we saw the price of gold getting any attention. So that might indicate a change in investor sentiment, some more interest in gold. And if people are no longer shorting gold, or if investors are no longer shorting gold, they might be looking to get into gold. That's going to provide some more competition for our friend, the S&P 500. So that's part of the reason why I'm short the S&P. My move is I guess I could say a structural play. I think I see quantitative tightening as taking money out of, all assets really. So I see almost all assets likely to be facing that headwind. I think bonds that are being sold off by the Federal Reserve are going to provide increasing competition for stocks over this next year. So I think that's why I'm short the S&P. But there's some other plays I want to take as well. I'll be looking at shorting this EEM, the Emerging Markets ETF. It's had a terrible year, and I shorted this earlier in the year, and with some success. And I closed that position and to try to play the other side of it to catch it on an upbeat, and that's not playing out yet, but we'll see how that goes. So I'm looking at either getting back into shorting the EEM, or something I haven't done yet is high yield corporate debt. So for the same reasons I think the S&P is going to go down, I think high yield debt is going to have a lot of competition from rising interest rates payable on higher quality debt. And I just think that there's going to be a lot of competition for the dollars that are in high yield, and it's a relatively much smaller market than let's say the Treasury market. So as the Federal Reserve destroys dollars, eliminates them from existence, my theory or my expectation is that the high yield stuff is going to suffer as the bathtub sort of drains, and these guys will be towards the top of the bathtub. That's a bit of a mixed metaphor there, but hopefully it's clear what I'm talking about. Anyways, that's the market update for today, October 15th, Monday. Good luck trading out there. Quick reminder again, I'm not an advisor. Do not take this as advice. Follow your own knowledge, your own advice. Talk to a professional, do some research, figure this stuff out on your own. But whatever you do, don't do something just because you think I'm going to do it or I'm suggesting it. Thanks very much. Bye bye.